Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris rapeseed, Winnipeg canola and Malaysian palm oil. Paris rapeseed. The wide dark blue bull channel, currently 473 even to 432.5, had seemingly been the main pattern here over the spring and summer, eventually leading to a sloppy looking late April, early August head and shoulders top. However, the market did not fulfill the potential on the downside of this pattern during August, having been stripped, quite a bit stripped, of its bearish incentive by the support of the slowly rising long moving average, currently 459.5, and finally rejected by the support below of the 50% absolute Fibonacci line at 445.5. This rejection did not happen all at once, but over most of August and the first half of September. And in the process, prices formed a not very pretty looking reverse head and shoulders pattern, a bright red neckline on my daily chart, currently at 476.25. Last week, prices broke higher over the bright red neckline, as well as over the mauve flatlining medium moving average, currently at 477.5. And since then, including this week, the market has been trying to stabilize over both of these resistances that are now supports, and at the same time trying to exploit the move higher, and doing neither very well. We thus have a primary topside target X overhead for the reverse head and shoulders pattern in the 496 even area, with a secondary harder to reach target X1 up in the 504.25 area. There's one other feature I would like to highlight, though at this time I'm not sure if it is a very relevant one. It's more like to be a just be aware type situation. It is the construction of a possible mid-August to date rising expanding wedge pattern, currently 461.5 to 494.5. Now, I've not highlighted it on my daily chart as I'm not sure of the weighting I should give it, but it is something to just be aware of. Winnipeg canola. The main pattern here until last week had been twofold, plus the various moving averages messing around with the market. The first pattern is the obvious dark blue late May to late June bearish Andrews pitchfork, which had captured the market, sort of, until last week. The second pattern has been, and I suppose still is, the insidious, purple highlighted neckline extension to the April to June reverse head and shoulders continuation pattern, which is currently at 611 even. That had acted as a bearish median line since last year. The market has moved up over it these past 2 weeks, but not too far away for it to have lost its influence as yet. During this time, the moving average has acted as a support, as a resistance, and as a nuisance. Right now, the market is pushing up over the combination of the slowly declining gold long moving average, currently at 627.80, and the mauve medium moving average, currently at 628.10, and using the green short medium moving average, currently 610.40, as a support base, if you like. However, these are not the only features that I wish to draw your attention to. You see, the activity over late July today has also created a quite lopsided double bottom pattern, and we are right now trying to break above the neckline, which approximately equates to the 2021 low at 629.60. Now, I'd normally wait a little while for a confirmation for this move higher, but I'm tempted with what I've seen in the other markets to lay out some potential targets topside right now. Thus, a primary target X would be in the 671.80 area, with a secondary harder to reach target X1 up in the 688.10 area. These of course presupposes that what I see right now is, as a double bottom, turns out to be a double bottom and does not become in due course a bearish cat's ears pattern. Bursa Malaysia crude palm oil. Of all the oil seeds and vegetable oils, palm oil has been the toughest to decipher in recent days. There's been a lot of activity, and the changeover gaps, most notably in mid-September, have been a great hindrance. However, there have been 2, possibly 3 patterns here that have influenced the market and seem to have captured it somewhat, at least since April. The first is the bright red broken upper time, currently at 37.36 of the August to November 2022 bearish shift pitchfork. This has acted as declining support throughout late spring and summer. The second is the green neckline, currently 42.48, of the September to November 2023 reverse head and shoulders pattern. Finally, I'd also possibly add the dark blue neckline, currently at 43.56, of the September to November 2017 head and shoulders top, though I am really not sure about this one. Anyway, the green neckline and the bright red broken upper tine have, sort of, caused the market to form a mid-April to date expanding wedge pattern, of which we are currently testing the top side. More on this should prices stabilise or exploit this move higher. Now, one final point, it's a somewhat contrary point, but a point I've been stressing now for 28 weeks. I gave my thoughts back then on what was going on thus, and I quote, "So what now?" Well, for this I went to my standby on such occasions, the longer term monthly charts. And there was one clear standout level that needed to be watched, and that was the November 2022 high at 44.08. This is a key level on the top side, because if it is broken, and properly broken, then there are very significant potentials topside. Similarly, if it holds in that area, then there are significant potentials on the downside. So watch to see if prices reach up to that 44.08 area, and then what prices do at that level. And that's the end of the quote. For the moment, I would still consider monitoring this 44.08 level, as it is a longer term play. We are now closer to it than we have been since early April. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.